All right, just hit the record button. What's up, y'all? So this question or this Zoom is going to be a beginner's Q&A. Just fire away in the chat, whatever you got. Of course, we're using the chat so that it's easier instead of having, 30 people unmuting all at once. So we already got one question. Again, just put them in there. If you have anything that comes to mind. So first question is, what's the best form of trading to start with as a beginner? So the word best being in there, I think that's going to be kind of a arbitrary word to have right there because I don't think there's a best way of trading to start as a beginner, but you just got to do whatever makes the most sense for you. If you're somebody who is busy during the day, then it's better for you to swing trade versus trying to force yourself to day trade, knowing you don't have the time or the capacity to do so. All right. By the same means, depending on your goal, if your goal is to make daily income, then it's probably easier for you to trade, or it's better for you to trade daily versus you trying to hit your profit target all in one day, like on Monday, for example, right? Or all in one swing trade. If my profit target for the week is 2,000, and instead of trying to hit it all right there, maybe I'm just shooting to get 500 a day, for 4 days instead of trying to get 2,000 in one day out the whole week. Right. So whatever the best form of trading is going to be whatever can allow you to be comfortable, consistent, and profitable. Right. Profitable, of course, you want to make money. Right. So it doesn't matter if you have a trading style that's cool, it's easy to follow along with, or consistent if you're not profitable. Right. And that could be something that you look at too, where you can have a 80% win rate, but if your winners are four times the size of your losers, then you might not be profitable, even though you're consistent. And even though you might be comfortable, right? There's a clear entry exit signal that you continuously use. Same thing with comfortable. You can have a trading style that's profitable and consistent, but uncomfortable, right? And again, that goes to you doing day trading while you're trying to work a regular job or working, a busy schedule during the day. That's uncomfortable. Although you might be able to be consistently profitable. You might have a strategy that requires 8 indicators and for you to check 2 stocks before you actually enter a trade. It could work, but it's uncomfortable, right? Nobody wants to sit there and look at 8 indicators and then go check this stock and then go check this stock before taking a trade. So you want to have all three. And the last one, consistency, right? You want to be consistent because that's the only way you're gonna continuously make money. It doesn't do you any good to be comfortable. Cool, it's an easy strategy. I'm profitable. Okay, cool. I'm making money, but this week I make 2,000. Next week I lose 1,000. This week I make 3,000. Next week I lose 4,000. You don't want to have all of those kind of crazy whipsaws, especially as you're working on your emotional aspect of trading. You want to have it where you're more consistent. You want to have a smoother kind of line for yourself where you're just repeating the same thing over and over and over and over and over. And then that way you can continue. But you want to make sure those three, consistent, comfortable, profitable, is going to help you find the best way for you to trade personally. All right, so good question. Y'all keep dropping beginner questions in the chat, and I'll go ahead and knock them out. And this is going to be recorded and put in the group. So, question: do you use limit or market orders for options? I tend to not get filled with limit orders and feel like I'm chasing. I use both. It depends on how aggressive I'm trying to get into the position. So typically, it's better to use limit for your pricing. Right, you're gonna get a better price if you do a limit order, or the price you want if you do a limit order versus a market order. If you're trading a breakout, or if I'm trading a breakout, then I might use a market order because I'm trading off the 1 minute to 5 minute, so it's happening a lot quicker. And I'm trying to get in, right? Those candles will shoot up real quick and just go, go, go. So if it's looking like it's about to do that, I'm not really concerned with being off by an extra $2. You know, Even 10 contracts being off $2 or $3, that's 30 bucks. Okay, once it moves up $1, I got all that back. So I'm not really, penny pinching right there in that sense. but you don't want to chase. You don't want to chase. You don't want to chase, but you want to make sure you're not missing the move either. All right. So this is something I had a conversation with on one of my one-on-one sessions yesterday. Is looking at call outs that get put out in the group. Somebody will call something out. It'll be up, $20. The contract will be up $20 when you look at it, and then it's a matter of, do I get in because such and such called it out at 200 and now it's at 220, or is that chasing, or do I wait? And that's where you looking at the charts and having that knowledge and studying comes into play, because it doesn't matter what Jordan called the trade out at, because it's still a trade. It's still a trade. It's just you're going to have a different price than Jordan. So you're not going to be managing it maybe the same way as Jordan, right? But if you see something breaking out of, a monthly, or if it's bouncing off a monthly support and you're off 30 cents or on the contract, then what I called it out at, who cares? You know what I'm saying? If it looks like it's about to keep running, if something's bouncing off of 100, headed to 105, I get in at 101, you get in at 102. Who cares? Catch the move, right? Um, so limit orders, typically, especially with SPX, and this is my first week trading SPX primarily, using limit orders has worked great because it has a lot of fluctuations. So usually my order get picked up anyway. So preferably that word, limit orders. All right. What charts are best to use on swing trading, 1 hour, 4 hour? You can use the 1 hour, 4 hour daily. Depends on how long you're swinging. All right. So remember, like, a lot of the questions related to what you're doing are going to be varying with answers based on your situation. Because if I'm swinging something overnight, then the 1 hour is important, right? 4 hours is important, daily is important. Um, but the 1 hour holds a lot more weight if I'm just doing an overnight swing versus if I'm swinging something for 3 weeks, or I'm doing a month long swing, the hour doesn't matter as much. At that point, I'm looking more so at the daily and the weekly if I'm swinging for 4 weeks, right? So typically, if I'm doing like a shorter term swing, maybe under a week, then a 1 hour, 4 hour. If I'm doing 2 weeks, then you can look at the 4 hour and the daily. Uh, Shorter term, I like to look at the daily and then enter off the 1 hour. Can I talk about gap fills? Is it primarily on gap ups or gap downs? Typically, gaps get filled when they gap. They usually get filled. First off, I'll say that. I actually was doing research on gaps today. And I think it was like the last 25 years with the S&P 500, it feel like 91% of its gaps. Um, and then I started looking at individual stocks and all of that. But most of the times they will fill. It's just a matter of when. All right. So the smaller the gap, the more likely it is to fill the next day. The bigger the gap, the less likely. And of course, that makes sense when you think about it, because that's a bigger move to have to reverse and flip. But the word or the term gap fills, that refers to it filling that gap, whether it's up or down. And typically, you're going to have a shorter term gap fill or a quicker gap fill in the direction of trend, right? So if we're in an uptrend and we gap down, then it's more likely that we'll fill that gap back up quicker than if we just gap up in an uptrend, right? Because that would need a reversal to happen, whereas a gap up or a gap down, rather, in an uptrend, we just need a continuation of the current pattern, right? When it comes to gap downs, um, gap ups, again, think about depending on what stock you're trading. If you're trading a stock that's, like I said, in an uptrend, then you have to wait on a pullback. Um, he's going to pull back to close that gap. Otherwise, it's going to keep going. Is it a momentum? Is it moving off momentum? Right. If it's a stock that's bad, if it's a stock that's dropping already, then yeah, it's going to fill all those gaps on its way back down. Um, so yeah, gap fills typically is anytime you're looking for a gap, and it's an easy way to have a target, whichever direction you want to trade it. Good question. Y'all keep dropping questions in the chat. Trying to keep it more beginner friendly, but you can still ask whatever, but trying to keep it more beginner focused. How exactly do you set up an options trade using Robinhood or Webull? Can I show this setup, please, and thank you? I can't show it. I actually don't know my logins on either one of those to use on my laptop to show. Uh, but whatever your brokerage is, broker specific questions typically can be answered on their site. Right, so they should have walkthroughs. That is one of those ones that is probably easier on YouTube, because it's not really a unique question per se. You know what I mean? Um, so using a brokerage, setting a stop loss on a brokerage, setting certain order types on a brokerage, anything that's brokerage related, I typically just say, look at their site because they might. I don't even use Robinhood, right? So they might have had an update that I don't know about, and I'm gonna be fumbling around trying to figure out how to show it. But on Robinhood, you used to search the stock, go to the stock, hit trade options, and then you can select based on expiration, and then you have the strikes, and then you go from there. And Webull, you have to go to markets, assets, search bar at the top, search the stock, pulls it up, hit options, so like the second one to the right. And then again, you can choose how you want to go about choosing what option you want. How do you mark up your chart for the day or weekly trades? So because I'm an intraday trader, typically I'm trading on the 1 minute, 5 minute. I usually sometimes I leave my levels there, but usually I start the new day with fresh levels. I find that my trading is more consistent when I wait at least 30 minutes to an hour after the market to start making trades. And I'll just use the levels because I'm trading 1 minute, an hour into the market. I have 60 plots of price data that I can go and make all my patterns off of and all my levels off of. I'll use pre-market levels too. When it comes to swinging, I'll draw levels up on a weekly, daily. Day trading, typically I'll do pre-market and current market, that day. And sometimes you'll see a retest of the previous high and low. So sometimes I'll mark those out too. But that's it. Mainly is what's going on today. And now I have potential levels based on high and low of yesterday. There's a way to reverse the trade real quick once you made it and realize it's not what you wanted to select. Close it. I don't think there's a reverse button. So if you put in an order and it didn't get filled yet, once you get filled, you're in. All right. But if you put an order in and you're like, oh crap, I meant to get calls, but I got puts, or oh crap, I meant to get a different expiration date. Typically, there's a modify order button on that order. You need to go to your orders in that brokerage. Again, if you don't know how to do that, that's something to look up for that brokerage specifically. But you would go to the orders section, and then that's where you can cancel or modify that order to adjust to whatever you want to get. But if you're already filled, you're filled, and you just got to sell it and then get in a new trade. And I'll say, if you realize that you got in the wrong thing, don't try to make like an excuse for it as if it was the right thing. Oh man, I got calls for this week. I meant to get 2 weeks out. I guess I'm just going to see what happens. No, just sell those calls and get the calls you wanted to get. Right. So make sure you get out of that. Keep asking questions, y'all. Trying to do more beginner questions. Keep putting them in the chat. Appreciate you, Jordan. Appreciate you. Thank you. Welcome for sure. For sure. Well, Quinn. Cree. Should beginners avoid trading during the first hour of the market? The first hour of the market is going to be, your most volatile hours of the market, first and last. That doesn't mean you need to avoid it necessarily. So when it comes to how we think about the market, how we identify ourselves within the market, I don't even really it's all it's like these terms, the terms aren't really clear, right? What I mean by that is what makes a beginner a beginner? At what point are you no longer a beginner? Right? When do you enter novice realm, right? Or an advanced trader, right? So for anybody, it's not a matter really of time. 'Cause that's one thing we've talked about it before is that you're not a beginner based on time, besides maybe your first week, right? But for anybody, if you have a strategy that you've tested and is shown to be profitable during the first hour of the market, then whether you've been trading for a year or 10 years, you should run that strategy. However, if you can't find or create a strategy that's successful within the first hour of the market, and that has a lot of back and forth swings, so maybe you get broke, fake breakouts and all of that, that's fine. Um, the other thing is trading it live, right? If you look at your trades and you keep a trade log, which you should, if you're keeping a trade log and tracking what you're doing, and you notice the first hour, when you trade the first hour, you getting ate up, then you should leave it alone. All right. So that's one of those things that's more of a self-assessment. I don't think there's any certain point where it kind of flips. Um, it just depends on what you're trying to do. Depends on what you're trying to do. Depends on what you've tested. Depends on the results that you've been getting, and then you can, do whatever makes the most sense. Tiff said, "What sectors do horrible in a pre-recession or full recession? I see companies are starting to slow down on filling job positions." So that's one of those things you want to look at. That's the sector rotation that we talked about before, right? So I'm actually just gonna pull it up on my phone because I don't have it. I know which ones come out. I know which ones money goes into, but I didn't know exactly which ones money. Hotel card. Hold on. All right. Sorry about that, y'all. Well, I ain't do it, so I rescind my apology. All right. So entering the bear market. What does bad? That's one of those Googleable. What stocks do bad in recession? And we're gonna pull it up. I already know Boeing, Halliburton do bad. Tech, I think, usually does bad in a recession as well. So money's gonna flow into stocks that are more like healthcare, um, consumer staples. It's gonna start flowing into financial. So that's what money's gonna start flowing into. As far as where it's flowing out of, trying to find something. Automotive, oil, gas, sports, real estate. Doo, 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 doo. Yeah, yeah. That's one I'm not really seeing too much on, just off the quick Google search. But you already could see tech for sure. Money flows out of tech. Uh, you could really look for. There's one thing you could do is look for what was popping when there wasn't a recession, and then those are probably going to be what flip, and money's going to start moving out of those when it is a recession. So that's something I can't find right now, and that's fine. All right. What is your preferred way to find underlying assets before they make a major move? I've tried scanning for relative volume and the results have been mixed. So I do have two scanners on FinViz that I use when I'm looking for something that might have a big move. That's mainly going to be looking at higher volume compared to relative volume and short interest. So there's different ways to look for them. You can look at things like short interest, right, and look for potential short squeezes. So the same stuff that happened with GameStop, AMC. A lot of those meme stocks, a lot of those are short squeeze related. But a short squeeze is where there's a bunch of people short, stocks moving up. And then to cover those shorts, they got to go buy a bunch of shares, right? So that's going to push the stock up even higher. So looking at stuff that has high short interest, I think I have mine set to go for 30% or more. It's going to, be able to show you that. The other thing is you can look for squeezes. There's different indicators that do like the TTM squeeze, things like that. Tightening of the Bollinger Bands, tightening of the Keltner channels. Anytime that you're looking at periods of consolidation, because the more consolidation you have, then the more likely you'll have a big move in either direction. Looking at patterns that are, tightening formations, uh, inside bar patterns. We have a bunch of inside bars. Again, just any form of consolidation that you can find on a scan is going to be able to help you more easily see stocks that have potential to break out. And then, like Dennis said in the comments, in the chat, we have a stock breakout bot in the Discord. So there's a bot in the Discord that will send stocks throughout the day that are breaking out and breaking down. So that's going to be at the bottom of the Discord in the bot section. What other questions we got? So this wasn't a question, but if you have questions, keep putting questions in the chat, because your question is no bad questions. The recording isn't going to have your name next to the question you asked. Only people on the call are going to know. But one of the things I want to talk about while I wait on another question is, again, sizing and account management. Because how you manage your account is a lot more important than a bunch of stuff. So I'll try to break it down without getting too mathematical, but looking at, for example, having a 50-50 win rate. And I think most traders, think the average trader has like a 40% win rate, maybe, or something like that. But looking at that, if you go 50-50, if your risk to reward on every trade is the exact same, then you'll be making 500, losing 500, making 500, losing 500, right? So knowing that, you want to make sure that if you're going 50-50, that you have a more favorable risk to reward ratio on your trades, right? And so that could be a 2-to-1, that could be a 1.5-to-1, where now you're going up 1,000 minus 500, up 1,000 minus 500, right? And you're starting to build up. The other thing is, again, account management, controlling the losses your account takes, not just the amount that you take on a particular trade, right? So thinking about it not just in a trade by trade, but in a overall account perspective, right? I don't want to lose more than XYZ amount of my account this week. That's a threshold. So there should be a threshold, I think, whether mental, but it really should be kind of really written down or noted, that 5% of my account this week, 10% of my account, right? If I go down 5% of my account in a week, or 10% of my account in a week, I'm about to stop. I'm about to stop, reassess, look at everything. 'Cause I think the thing is, to be real, a lot of people put too much of their account in the market at a time. And I think that's, you look at like the biggest reasons why most traders fail. I think that's one of the big ones. Because there'll be people who are in chats, trading like this, right? We're in a group chat, we call out trades that we're taking. I have a team who does this, and I'm vetting them, all this stuff. They have to have a certain win rate, a certain this, a certain that, to be able to be on the team. And then they're putting that out, and people still will, oh, I just blew this account, or oh, I just took this big loss and now I'm done, I wiped out half my account today, right? But there shouldn't be a situation where you're wiping out half of your account in a day. That doesn't make sense. You have to look at, what did you do that made that happen, and trade true to your account size. If you have a $1,000 account, and Jordan calls a $500 trade, you shouldn't be taking that trade. That's half your account. If I close minus 25, no, you just lost a quarter of your account. In the chat, correct me if I'm wrong on the math, but you just lost a quarter of your account off of one trade, right? So you have to make sure you're managing that account. Um, if your goal is to use this as a stream of income, right? I think you should get into the habit of withdrawing from your account on a regular basis, right? Whenever you gain, it can be whenever you gain. I would really prefer at the end of the week, whatever you gain, have a withdrawal percentage for yourself. Hey, after whatever profits I make at the end of the week, I'm pulling out 20%, and start using that money. Start using that on food. Start putting that in your gas tank, right? Create that habit so that when you're trading, you're knowing that it's going to your real life. And that's going to help you also trade more seriously. Right. If you're just trading for fun, you're going to take more lottos and more, willy-nilly type of trades. And I don't really care. I'm just gonna do this. This doesn't fit my strategy, but whatever, we're gonna see what happens. But when you start moving that money out your account, like, yo, this money is gonna pay for this, it's completely different. Look at D Wiz. This is a beginner's Q&A. All right, let me get back to the questions. But make sure you're thinking about your account management, not just the trade by trade. People love to talk about trade by trade management. They all play into a part of your account. All right. Thanks for the question, D Wiz. It's all good, bro. I'm gonna still get to it. All right. Can you start trading with less than 1K, or should you have at least that amount first? You can start with anything. All right. So the start amount, and like you might have known, depending on how long you're in the chat, we had a $500 challenge that we did. I've done a $250 challenge. I just had an account that I took from $80 to 880. I actually hit 900 the other day, yesterday. So started with 78, hit 900. So you don't have to have $1,000 to trade. The more that you have, and I think if you're going to start practicing, 1,000 is good. I think if you're going to start trading a little more heavily, it depends on your goals, really, but I think you might want to get to 5,000 too. Because like I just said, that account management comes into play, right? You having a $1,000 account is fine, but you have to trade it as such. That means that you really shouldn't be taking trades that are over $100, in my opinion, because you want to be able to control your losses to your account, right? And if $100 per trade, even if you take a 100% loss on a trade somehow, that's 10% of your account. You still got 9 shots left with $100 per trade, right? Versus you taking $500 trades, again, assuming worst case scenario, it goes to 0%, or goes to zero, then you only got 2 shots. All right. So you want to maximize the number of shots you're able to take. Okay. So you don't have to have a minimum, but the more you have, the easier it is. The easier it is because you have more opportunities and you have more wiggle room. Do I trade with indicators or strictly price action? Both. So I trade a lot of times with just price action. I found that to be a lot easier for me than having a bunch of indicators. I do sometimes trade with indicators. So I'm trying to create some strategies that I can easily transfer to different people, because everybody doesn't read price action the same. But if I have a strategy where I could tell you, wait for the RSI to do this moving average to do this, and this candle to do that, that's your entry, that's your exit, that's your stop loss, and you can perform that, then now you can make money easily because you have the step-by-step rules that work. And so part of me and doing a lot of back testing, I test a lot of stuff, especially on weekends. I'll pull up different indicators and test different strategies. I'll create different strategies. Is that right? And like I said before, comfortable, consistent, profitable. It's a lot more comfortable if you're just waiting for indicators to hit certain levels before you take a trade, right? Because that way you've already tested. Hey, I know 9 times out of 10 or 8 times out of 10, when this and this line up, majority of the time it's gonna hit. I'm gonna take a losses, cool, whatever. Majority of the time it's gonna hit. So I'm just gonna trade that, and that's it. You don't have to think too hard because it's already there. So I personally do both. A lot of times it's just price action. I manage my trades off of price action, but I am working on indicator-based strategies, and I do have indicator-based strategies that are a lot more clean cut. Is there a specific day of the week beginners should not enter in the market? I don't see why not. Um, I don't see why not. I think again, I do want to touch on like label how you label yourself. Um, you label yourself as a beginner and you're going to try to box yourself in as a beginner, like mentally start thinking about the subconscious and all of that. Um, so I wouldn't say a certain day of the week that you shouldn't trade. There might be more volatile days of the week. Maybe when there's big events in the market, right? So maybe when there's Fed meetings, maybe you shouldn't trade if you're a newer trader. Quad witching day, maybe you shouldn't trade if you're a new trader. Right? There's certain events that happen periodically that might be a little harder to trade uh, if you're newer to it, but I don't think there's a certain day of the week you should avoid. I think that's just again, as a beginner, you should be testing and paper trading. As a beginner, you should be testing and paper trading so that you can find those nuances in your trading style and then fill up those holes that you might have. And then you can see when you keep your trade log, dang, Mondays I usually don't do good, but Wednesdays and Fridays I do great. Don't know why it is, but if that's the best days for you to make money, trade those days. And then start looking at how you can be better on Mondays, Tuesdays, and Thursdays. All right. Do I prefer to buy more contracts on a trade or perform more smaller trades? Uh, I prefer to buy more contracts on the trade than buying smaller by them, yeah, than performing smaller trades. So when I'm live testing the strategy, I'll just buy one contract so I can get more repetitions. Right. And the more reps, the more data I have for myself to say whether or not this is a viable strategy when applied in real time. Um, so that's my preference. If you don't want to trade, or I don't want to trade 10 times. I traded 10 times yesterday. 10 trades, which was fine because I was testing something and I went 8-2. So I was cool. But I'd rather not take 10 trades. I'd rather take 3 trades, go heavier on those 3. And if I lose 2, win 1, cool. No, that's not cool. If I win 2 and lose 1, oh, then cool. All right. So that's what my preferred method is. And then you can get done, right? Because at the end of the day, there's another thing I talked about, another concept I shared on a one-on-one I had yesterday, is you don't get no trophy for win rate. You don't get no trophy for trade count. Right. At the end of the day, your goal is to get money. You know what I'm saying? And as people, what we want to do is find the easiest way to get what we want with the least amount of effort. And let everybody play the damn lottery. They want to get money with the least amount of effort, right? And there's all other instances, people want to do stuff with the least amount of effort, certain surgeries to remove, so instead of going to the gym, diet, that could take months. Let's just get surgery and get it all taken off, right? So tons of different examples where people want to get stuff, the result, least amount of effort. Same thing with trading. If I can make 2,000 in a day without me having to take 15 trades and sitting here looking at the chart all day, if I can make 2,000 in 2 trades, why wouldn't I? Right? How long should I practice trade with play money before I go live? I tend to day trade to make daily profit until you're profitable. All right, practice until you're ready to go on the field. So you definitely, the in the field experience is going to be completely different. But practice until you're ready. Right? You don't want to practice and have a losing strategy and then take the losing strategy with your real money, right? So once you can practice and have a strategy that's working in practice, then take it to the field, go live with it and start with a smaller amount, because paper trading is different than having your real money out there and taking real losses and real gains. Paper trading doesn't have as much emotion in it, if any, right? So you want to first get the trade strategy down, right? So that's why I back test so much, and so that I can test out and see what might be something that'll work, right? And then when it's actually like, oh, okay, when I look at the back test, this has a pretty decent move, or this move happens pretty quickly, or this has a high win rate. Let me move it over to real trading, real time, and see how it actually would go for me trading it for real. Right. And then we can look at those things and see what the results are and see, does it carry over real time, or does it go into too much drawdown and it will pull most people out the trade? Risk management is important. Keep asking y'all beginner questions in the chat. Do you recommend using support and resistance or supply and demand to mark up your charts? What's the difference? It might be a difference. I mean, to me, supply and demand, support and resistance, the same thing. I think those are pretty interchangeable, as long as you take into account that it's not just one price. I think that's something that people get caught up on sometimes, like using just one price, which it can hold as just one price, but a lot of times it's kind of just that area. So that's why when I'm trading, I like to look for closes below a certain area, because you'll get a wick all the time, right? So you don't want to get wicked out of a trade or wicked into a trade. Um, so yeah, support, resistance, supply, demand, looking at supply, demand, but then support and resistance can also carry into other things where there's trend line supports. Um, certain moving averages act as support and resistance. So I like to mix it all up. I like to take trades that have multiple things lining up for them. Preferably, that's what I like. I like to be, oh, we're in an uptrend at a support level with the bullish candle. Cool. You know, like those are all bullish things lining up. Those are the trades I want to take. It takes you forever to get ready at market open from 8:30 to 10. I'm still charting and looking for stocks. My watch list drastically reduced to 100. How can I shorten my time spent on getting ready in the morning? Not sure what time zone you're in, so I'm guessing 8:30 to 10 here central. I'm guessing. Maybe. No, I don't know. Might be in Hawaii. Uh, so how to reduce your time spent in the morning? Prepare the night before. The stuff, unless you trade in pre-market, unless you're looking at pre-market levels, the stuff is going to be the same the night before as it is when you wake up. So prepare the night before. Uh, the other things you can do is reduce what you're doing. Right. So at one point, I used to every single day after the market go through a watch list of 200 stocks uh, for about an hour and a half. And then I would, mark what stood out. So I flip through my charts, and you already know if you see a pattern or not after done so many things. So I'm flipping through, click, nope, click, nope, click. Oh, okay, write that down. We'll come back to this chart, click, click. All right. So that's what I used to do. Then I started shrinking it down to, okay, you know what? I'm just going to look for these, 2 or 3 criteria. That's what I'm scanning for. And once I find those, that's what I'm probably going to, use as a watch list for the next day. So now it's only taking me maybe 15 minutes or 20 minutes versus an hour and a half. Now I don't even make watch lists anymore uh, because I'm trading intraday, and the way we're moving lately, we can gap up, we'll gap down. The pre-market analysis or the post-market analysis is probably going to get invalidated with the gap. Uh, and I'm trading what levels are actually formed anyway. So now I barely make watch lists. So now my time to get prepared in the morning has gone to waking up. That's it. If I can wake up, I'm good. As long as I wake up. As long as I wake up, I'm good. Right. So you can look at and this is one of my things was the pursuit of making things simpler. How can I make the same or a close amount of money with less effort, right? Like I said before, same thing I say all the time. People is like, if your job pays you 100 grand and you go 40 hours a week, what if they came to you and said, hey, you're only gonna get 90 grand, but you can work half the amount of hours. Most people would say, oh crap, so I'm losing 10 G's, but I get 20 hours back. So it's easier and simple for me. Uh, I'll probably take the 10 G's cut, as long as it doesn't, make a detriment to your life. You can't buy groceries and witnesses. But most cases, uh, you would take that because it's easier for you and the reduction isn't as big to outweigh that ease, right? So you can look at a way of making your watch list. You can reduce your watch list, reduce it by volume, reduce it by costs, right? Which stocks cost too much are going to be more likely to be out of the price range for what you're trading. Um, you can look for certain patterns. You can trade just certain patterns. So, you can break it down like that. Or you can also just look at what to cut. A lot of times people focus too much on what to do, and not what not to do, or people focus too much on what to add, but not what to take away. Right? And you can gain benefit on both sides. Should you buy at the money contracts or in the money if possible? Should out the money be reserved for swing trading and farther out? Pretty much. Um, so that's just going to come into, again, strategy, and it's going to come into the type of trade you're taking and the risk you want to put on the trade. Obviously, the further out the money you go, the higher you have a chance of not making any money. Uh, and then being at the money or in the money, you're more likely to be profitable. So it's a matter of your risk. A lot of people, as you build your account, a lot of people just trade that I talk to who trade larger accounts. A lot of them just trade in the money because for them, it's not about, I'm not looking for a 50% gain. I don't need a 50% gain. If I'm putting up $50,000 and there are people who put $50,000 on their trade, I ain't never put $50,000 on the trade, but people who will put $50,000 in a position, if I'm going $50,000 in a position, I might just be getting out at 10%, 5%, you know? And so I can go in the money and be a lot safer, reduce my risk, and grab 5 or 10% and be cool. Again, at the end of the day, the goal is to make money. The goal isn't to be the person who can screenshot the highest percentage and send it in to somebody. The goal, that is not the goal. You don't get nothing for that. Goal is to make money. So whatever is going to be best for you to make money, cool. If you're trading a breakout strategy or momentum strategy, then going out the money might make more sense because you're trading for a big move to the upside. So that's going to be fine, right? But you want to look at what makes the most sense again for your specific strategy. Keep asking beginner questions in the chat. When should you average down on the trade? Uh, So one, when you're averaging down or you're looking to average down, for those who don't know what average down is, average down means I got in a trade at $100, um, and now the trade is down and I'm buying more and reducing my average cost, right? So for example, I got in at 100, it goes down to 50, I buy in with a equal sizing position, um, and now my average is 75. And if it goes back up to 80, I'm up versus where if I was just in 100 still, I would still be down even it goes back up to 80. All right. So when it comes to averaging down, biggest thing to keep in mind is you're putting more money at risk. Right. And so when I'm looking at averaging down, which I don't do very often, the only time I'm averaging down is when I'm down in a position, but my setup or my reasoning hasn't been invalidated. Right. So if it's reversing against me and it's clearly going the other way, or it hits a price-based stop loss, there's no reason to average down. The trade is done, right? You entered off a price and price is showing you to exit. There's no reason to get in to average down. Averaging down is you buying a new position, right? You're buying a new position in this thing, thinking that it's going to go the way you want to go, right? So if it's consolidating and I'm down 20% due to consolidation before a potential breakout, because I thought I was catching a breakout, it came back and retested or it's moving sideways, then okay, cool. I'm averaging down, my move is still there, the setup's still there, everything's still good. But again, if it's reversing, if the news already came out, whatever the case is for a different reason, then there's no reason to put extra money on the trade. The other thing is looking at not averaging down. right? Thinking about, if I wasn't in this position already, would I get in, right? And so when you think about that, and that's averaging down and holding trades. When you think about, if I wasn't in this already and I put up the chart, would I get in now? If the answer is no, then you shouldn't be in right now, right? You shouldn't add to it. You shouldn't stay in it, because if you wouldn't buy it, if you weren't already in it, if you wouldn't buy it in its current state, then you don't have enough confidence in it making that move. So why would you put more money at risk? Right? Good question. Keep asking questions in the chat. Do you have any platform recommendations for a cash account to get around pattern day trade restrictions? Any cash account? No. Okay. You said platform. I use Tastyworks and Webull, mainly Tastyworks. That's me. Uh, find a platform that works best for you. Cash. You can do E-Trade. I think E-Trade has cash accounts. Fidelity probably has cash accounts. TD Ameritrade has cash accounts. There's a lot of different brokerages that you can use. You have to figure out what brokerage best suits you. A lot of people like Robinhood because of the ease of use. I don't know anybody who likes Robinhood now, but Robinhood still is probably the easiest one to use. They did just introduce cash accounts, so I'm just gonna put that out there to be fair. But if you're somebody who wants a simpler interface on their brokerage and you want a cash account, it's hard for me to say I'm recommending Robinhood, but you have options. Tastyworks is a little more advanced looking of a platform. You're gonna have to play around and get used to it. TD Ameritrade has the most features, I think, out of all brokerages. And so if you're somebody who wants to have a bunch of different features available and ready to access at one time, then TD might be the way to go, right? So looking at pros and cons, look at what best suits you. You said that practice trade in the different hits different than in the field. Yeah. Do you think the benefit is necessary to practice trade or just go live with small trades and grow that way? So I think you still want to paper trade. I never paper traded. I just back tested instead of paper trade. I back tested. Then I moved over and I was live trading. So I typically will live trade with a smaller amounts after I back test and find something that makes sense on the back test. I think paper trading is good, because paper trading is a way for you to live trade without putting your actual money at risk. And then you can again see if those strategies that you were creating have any validity to them in the real market, right? So I would say, yeah, paper trade, uh, get it down to where it's consistent. And once you're able to consistently have certain metrics, you should probably want to set certain metrics for yourself. Um, I want to have this percentage ROI per week on the account minimum, or this win rate minimum, right? And start practicing like that. And set up your rules. And the way to get the benefit out of paper trading is to set rules and stick to those rules. Not, I'm just gonna put a bunch of money on this and see if I can just get a big profit. Oh, cool. Wow, man. If I put $1 million on that trade, I would have had 75 million. Oh, no. Like if you can lay out clear, concise, here's my entry rules, here are my exit rules, stop loss, take profit rules, and you follow that over and over and over again, and you can see how the account moves, then you move over in the field. And if you can stick to your rules, then you will be good, right? The problem is not sticking to the rules. So it does hit different paper trading versus in the real, money is out there. But if you can follow the rules, right? If you do the same exact thing here and here, then the transfer should be the same. The biggest thing would then be your account sizing, maintaining that. So you have to get all those rules together on the paper trade side. So you have to practice like you're gonna play, right? And then it'll actually pay off. But have trying to watch my language here. Practicing weak is gonna lead to weak gameplay real time. So if you practicing paper trading and you only just like kind of sort of doing it, then it's not gonna work, right? I don't know what y'all talking about. They said that was fire. I don't even remember. Hope y'all taking notes. What I said. Does Tastyworks have paper trading from options? I don't think so. I know TD does. I know Webull. Weeble might, but yeah, TD does. Think or Swim. Shay Dub just put that in the chat. Appreciate you, Shay. How important are pre-market levels compared to open market levels? So pre-market, oh yeah, Robinhood does let you paper trade, or at least it lets you put it on a watch list. I'm not sure if it lets you manage the account like a paper trading account. Um, how important are pre-market levels compared to open market levels? So of course you can't sell your contract pre-market. So of course the open market matters the most, but that's going to depend again on how you're trading, right? If you're day trading, then if you're day trading, then pre-market levels are going to matter a lot more because those are going to also act as support and resistance throughout the day. If you're swing trading and you have a contract that expires in a month and you're looking for a move to happen in 2-3 weeks, pre-market levels don't matter. Who cares, right? You're looking for a move to happen over the course of a week, not the course of, pre-market. So they do matter a lot more if you're intraday trading. Best platform I use to backtest. So yeah, if you go through the recorded classing section, you probably have to scroll up. Maybe I have to do a new class on it. But I used, and I'll put it in the chat, Profits Pie, and I have taught, I think I taught 2 classes covering it, but Profits, Profits, pi.com is where I did a lot of back testing. You can access 75 years of data. I mean, not 75, 15 years of data for like $75 a month, I think. And that's where I've ran over 500 back tests. You have CMLViz. They have an options back tester that you can use as well. That I think they cost $150 a month. So those are the two main platforms that I've used to back test. I mean, I've used Tradeics. There's tons of different back testing platforms that you could use, but a lot of them have different features. A lot of them have different accessibility. CMLViz Pro was the only place I found that could reliably back test options. Tradeics was the first time, Tradytics. That was the first spot that I could back test intraday. Looking at 1 minute, two, not 1 minute, 5 minute, 30 minute, because most back tests are going to have you run for a day, like a daily move, but not being able to look at 15 minute. And if you're entering off of 15 minutes. So I would say, yeah, definitely, back test it out first. Once you see the back test is actually successful, then, okay, I'm still recording. Then you can move over to paper trading it, see how it goes with actual real time. Again, lay out strict rules. When I was trading, the past 2 days, especially today, I actually had a sticky note on my laptop that had entry, this, exit. This is your exit. This is your exit for your trailing stop. This is your stop loss exit. This is your take profit. Entry criteria, it needs to have this, this, this. That's the entry. Exit, stop loss, trailing stop, take profit. And just follow that. If you can lay it out and follow it to a T, then you can see, if it works, it works. If it don't, it don't. And then you just go from there. What other questions we got? Beginners questions. Quarterback. Can you trade options on crypto? I think I've seen that pop up somewhere. I just trade futures and use the leverage from futures, because with options, your whole point of trading options to get leverage. So I just use futures to get leverage trading crypto. Does my day trading consist of only stocks, or do I include Forex? I don't trade Forex. D-Wiz said he thinks there's a platform you can trade options on crypto called BAAKT. Okay, thank you. My trading sticks to crypto and stocks. Yeah, I be seeing Bane and Quiet Money in the Forex chat pop off though, and I'm every time I see it, I'm like, dang, bro, I'm missing out on the Forex bag. But I'm like, okay, I'm just gonna get the stock bag. I'll be fine. And then crypto after hours. So I heard you say that I set stop loss based on levels and not percentage. What if the stop loss level exceeds my preferred percentage? Typically, it won't. Um, it won't. So there's two aspects to this. So I'm gonna give you one example, one exaggerated example, but a very real example that will help kind of drive that point in. Um, but typically it doesn't because my level stop losses are usually pretty tight. I have tight stop losses. They're just I just opened that crypto thing. I have tight stop losses, so I'm not gonna drop down. If I stick to my stop loss, I'm not gonna drop down 30%, 40%, 50%. Because my stop losses are usually levels or candlestick based. Uh, and I use trailing stop losses too. So once I'm in profit, usually I don't go back. So even if I'm up, once I go up 10%, I'm not gonna lose. Um, so my example though that I always use to help people understand when it comes to that is again looking at your account and position sizing and thinking about somebody who has $1,000 account, right? If you have $1,000 account and you only want to risk $100 per trade, right? So looking at my account, you're like, yo, got $1,000. All right, I was on this call with Jordan. He said if I take $100 trades on my $1,000 account, then I have 10 trades. Assuming if I hit for a zero on every single thing, if everything goes to crap every single time, I got 10 tries. All right, cool. Okay. If you got $1,000 account and you take a $1,000 position, then once you're down 10%, 10% of your account's gone. Once you're down 50% on that trade, 50% of your account's gone, right? You don't have any breathing room at all. But when you look at trading with a $100 of your $1,000 account size, you can take a full loss and still be within your risk parameters, right? So the other thing is looking at and assessing how your trades perform, and then you can go back and then move off of those. So when I was swing trading uh, a lot of people, even sometimes, some very rarely with my day trades, but when I swing trading, a lot of times people be like, yo, Jordan trades usually hit for like 30, 20, 30, 40%, but they'll drop 20% first, right? And when you're trading with, that's why I tell people who are looking at what I'm trading, like if you're gonna look at what I'm trading, you need to go off of my stop loss. Don't use your random stop loss you thought about this morning while you was eating your cereal. Because I want to go 17% stop loss. I want to go 15. I want to go 30. I'm trade Jordan stop loss. Um, but but if you see that consistently, you're going down 20%. Um, yeah, D Wiz, that was a DM. If you see consistently you're going down 20%, then you know that you need to have that wiggle room. Of course, you can tighten up your entries, but you need to have that wiggle room to where 20% drawdown isn't going to massively impact your positioning, right? So if you're sizing and you're like, okay, well, look, I only want to risk $100. Um, so you take a $500 position and usually you go down 20%, and then there's your $100. Right. So maybe you take a $400 position, you go down 20%, that should be $80. I think. So you still have the wiggle room where it's not hitting your $100. And then when you bounce back up, you're good. Right. But yeah, with me, with my stop losses, I'm 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 not going down. I rarely sticking to my stop losses, I rarely will drop down 30%. Uh, the only time I take more than a 30% loss based on again my stop loss, my price stop losses. I don't look at percentages and be like, oh, it's down 20%. Because it's just all depending on where you get in. And the move can be the same, the trade can be the same. But if I get in at 10:05 and D Wiz gets in at 10:10 and Moody gets in at 10:30, all of us are probably we're all gonna have different percentages unless we get the exact same price. We're all gonna have different percentages when the stocks are moving or when the options moving, but it doesn't mean that as long as it doesn't break support and we in calls, there's no reason to get out and break support. What I'm getting out for? It's about to bounce, right? So there's that. We got any more questions? Do I use NinjaTrader? No, I don't. I trade crypto futures on KuCoin, but I've heard there's a lot of other platforms. Some have better fees. Moody, I'm gonna answer your question, even though I feel like it's a joke. I don't know if that was meant to get sent to the chat. Moody put in the chat, "How can I be like you when I grow up?" The only reason I'm gonna answer it is because people do say that a lot. Like ask, and I think I've accomplished fairly a large amount of tasks. That's a real question. Okay, I've accomplished a lot um, in a short amount of time, and that's because I figure out what I want, and then I figure out what the steps are to get what I want, and then I do it, and I do it quickly. I try to make sure that my time from idea to implementation is as short as possible. Um, I try to make sure that the things that I do are focused. Um, I think about the opportunity cost with everything that I do for the most part, right? Whenever you're saying yes to one thing, you're saying no to something else. So, I'm out of town right now. I could say yes to, hey, let's go do this, let's go hit the bar, let's go blah, 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 or whatever the case is. But saying yes to that would be me saying no to, this Zoom, right? I could have canceled this Zoom and said, hey, I'm just gonna do it Saturday. Um, right. But what does that lead to? That leads to, inconsistency with my classes. That leads to people who probably were ready for the Zoom, missing the Zoom, right? There's different stuff. So thinking about the cause and effect of things that I do too. Um, Shortening the time frame for stuff. So I'm gonna age myself here. I rarely age myself. Uh, and people give me a lot higher than I actually am. But when I went into the workforce, my goal was to originally my goal was to retire from the 9 to 5 by 27. Um, I left my 9 to 5 at 23. So like shortening it down, how can I do this quicker? Because however much time you give yourself to complete something is typically how much time it's going to take. Just like a work deadline, just like when we was in school and we had papers, if your work deadline is, hey, this needs to be done within a week, typically that's how long it's going to take. So shortening down that time frame that you allow yourself is another thing. I'm 31, still slaving, bro. You winning, man. Appreciate it. It's quick though. You have to think about it. So for me, when I was like, I want to be done at 27 from the workforce, Quinn putting me out there in the chat. Um, so when I was thinking about the workforce and me leaving, right, this is literally what I did. And I'll leave this recording, but this is like more club MSC talk. This isn't really stock. Um, and then we did just get a stock question. So basically, I figured out what I wanted. I was like, okay, I want to be able to make $200,000 outside of my outside of my job. I want to be able to make $200,000 a year. And came very close. I ended up leaving my job a little earlier than I planned. Was talking to the wrong people, and I guess they basically was like, anyway, it's like kind of slick. They was hating, but whatever. So it's just shortening down the time horizon. I'll wrap the question up here. I'm not gonna get too deep into it. Shortening down the time horizon you give yourself to accomplish a goal. Instead of how do I do this in 10 years, how do I get it done in 5? That forces you to get into a different type of bag, a different type of mode, because you have to look at stuff differently. Right. If you want to lose 10 pounds and or 30 pounds in a year versus I want to lose 30 pounds in 2 months, both are doable, but both require a different level of effort and execution and planning and preparation and sacrifices you got to be willing to give to make the goal achievable, right? And so you can do either one. Again, whether that's, leaving at 20, 25, 27, whatever, versus 30, 35, 65. You can set yourself up to leave your job at 65. That's what most people, do with the IRAs. It's structured to have them retire at 65. You can do that, right? Or you can say, man, forget that. How can I get out by 30? Okay, that's going to require you to move differently. Instead of you buying a new car, instead of you buying a new house, it's because you got more income. I'm about to increase my expenses. Instead of doing that, that money's going into my investments. That money's going into business ventures. That money's going into whatever that can go ahead and build you up, right? So you can get to your goal quicker. I don't got a new car. I make a lot of money. I make a lot of money. I still drive a very used car. And we're not even gonna get into all that extra stuff. So end of the day, there's your answer. I can talk with myself all day. It's just a matter of focus. It's a matter of knowing what you're willing to give up to get what you want to get. And having a deep enough meaning that you'll be able to sacrifice other stuff in pursuit of what you really want. Delayed gratification, yada yada. All right, back to the stocks. All right. I notice all traders in Discord use different strikes. One thing they have in common is high volume and high open interest. How you validate a strike. So it's good. Yeah, we do. It's good to say that. And I have gotten that feedback for a couple of times is that people are saying y'all call stocks, trades on stocks that actually have liquid options that we can get in and out of. I'm like, what? Why would you be trading a stock that you can't get in and out of? Apparently the Discord is what they call, I don't know. That's weird to me. Um So as far as strike, how I look at strike, I typically just buy at the money on one strike out. That's it. And that's me. So me personally, again, uh, as I funny to say this with the topic we just had, as I got older, um, I was like, how do I simplify things for myself? Again, pursuit of simplification. How do I simplify things for myself, still have a positive result that I'm good with? And so I started learning about taxes. I started learning about Greeks when it comes to stocks. And I said, screw it. I'm just going to hire somebody to do my tax. I'm not going to worry about all this stuff. Hire somebody that knows how to manage taxes. I started diving into the Greeks, and there's different strategies that are based solely off of Greeks. There's gamma based strategies and all of that. Certain stuff, Delta, all that. And I said, you know what? Screw it. I'm just going to buy at the money or one strikeout. I'll be good. That's it. So that's how I choose my strikes. Moody, Avery, Zay, how they choose their strikes might be completely different. You can go where you have a certain target you're looking to hit, and then you drop your strike down 2 strikes, 3 strikes. You drop 3 strikes deeper into the money or towards the money versus your target. I wouldn't really say that's a solid way to do it too much, but I just shoot for at the money and the money. At the money or one strike out. Sorry. D Wiz said he don't believe my age still. Yeah. All right. Any last stock questions before we just talk about? Hey, I'm gonna tell you, I don't be aging myself, bro. I don't like to know how old I am. I'll let y'all know. I'm gonna stop recording, and I'll let y'all know. Any other stock questions? So give it 30 more seconds so I can have the recording be stock focused, bro. I will, Moody. I'm gonna let y'all guess, and then I'll tell you. All right. Any other stock questions though? It looks like we're just about to be talking about Jordan's age. Stock questions. Stock questions. All right. I'm stopping the recording, but of course we'll still answer your question.